So global supply chains are about to break up and US bond yields are flying higher. And there's no other way to say it. US-China relations have forever collapsed and now rates in the US are negatively affected. There's a big reason why the US did a partial U-turn on the tariff war. It's because the agenda of lowering bond yields is not working. In fact, things just backfired badly. And the bond chaos we are seeing all stems from the trade war with Beijing. And what did we really expect China to take it lying down? The moment Trump gave China an ultimatum with his 100% tariff and enforced it, Beijing had no choice. Retaliation is the only option left. And boy, did they hit back. China raised their tariff on US goods to 84%, which is an insane rate. US products are already very expensive, and this new rate is simply a declaration from China. If you want a trade war, let's go all the way. We will fight all the way to the end. And effective April the 10th, you can expect all US exports into China to more or less grind to a complete halt. Now, Trump's response, a 125% tariff while a pause was given to other nations for 90 days. So it's game on between the US and China. The level of tariffs on each other is simply mind-boggling at this point. Plus, we have to understand the sentiment in China today. The desire to import US products is probably headed down to zero, not just from the price but from an economic security and national standpoint as well. A US recession is almost guaranteed. US consumers will be facing a 100% tariff from Trump, especially on all these Chinese products, so they have to pay more. American companies that export to China will face a serious revenue collapse as well. The US as a whole is going to slow down, and we have to break down the effects and what it really means for the future here. The US has effectively isolated itself and China just sealed the deal, but yet there will be no U-turn. Besson just confirmed this on China.
That they have some very smart, the economists, the academicians, technocrats within their bureaucracy, and they would be telling the leadership that we do not have the edge here. They are the surplus country, that their exports to the U.S. are 5 times our exports to China. So they can raise their tariffs, but so what?
Now, I believe he's wrong. The US imports nearly $150 billion worth of goods from China. Sure, Chinese companies sell to the US 3 times more, nearly $450 billion in goods. But the US is not the world economy. It's important to realize the cards Besson is playing with. He is weaponizing the US consumer market because the world still needs dollars to function. The US is counting on that to win the day. However, the American consumer is about to literally collapse. When Trump imposed his tariffs, to the average American, this is as good as a tax hike. You pay more when you consume. According to the ITEP, Trump's tariffs will be a serious blow to all income groups, but especially damaging to the poor. The middle class will face a cost of living increase of at least 4%. They will have to pay $3 to $4 to $5,000 a year more to get by. But for the poorest Americans, their tax change could hit nearly 6%. And this calculation is based only on the original tariff plan, a 60% tariff on China and a 20% tariff on goods imported from the rest of the world. So the tax change could be higher than what we are seeing now. The US has sandwiched itself into a really dangerous position. Because of the new tariff regime, trying to find cheaper alternatives from the world is going to be quite impossible. Prices are going up by at least 10%, and for stuff made in Vietnam, it's going to rise by over 40% if there's no permanent rollback. So trying to buy from non-Chinese suppliers will also be a problem. According to Goldman, the US has a bigger dependency on Chinese goods than Beijing. For 36% of US imports from China, US consumers will have trouble finding alternative suppliers, and in some sectors, this dependency is even higher, some more than 99%. But for China, only 10% of their imports from the US will be harder to replace. The US fighting China will cost a lot, and the American consumer will be the one paying the bill. And this is the pain felt by just US consumers. When Beijing raised their own tariffs by 84%, it's a signal to US companies that exports to China have effectively ended. Now this might surprise you, but many American companies, they ship a lot of goods from the US to China. They rely a lot on Chinese revenue to stay afloat. We have Corning, Intel, and Lam Research. They export billions of dollars in products to China, especially in semiconductors. For many of these companies, their net sales in the Chinese market is over 20% of total revenues. So any tariff imposed by China will be a big hit to their bottom line. And if revenues fall enough, we could see either salaries stagnate, they could fall, or companies laying off people. It's not that complex. So you will have people earning less while paying more for the same stuff. How is that a win? Now, a lot of US companies are terrified of what's next to come. It's not just revenues from China collapsing, but domestic spending dropping. Delta Airlines, for example, is withdrawing their full year financial guidance thanks to the trade war. They have no idea what their earnings will be, and it makes total sense. Will Americans have enough money to spend when the tariffs go up? Will foreigners even want to travel to the US after this? Will the 90-day reprieve get rescinded? And let's not forget their own business costs are going to start to head up. So profit margins are squeezed. And if you see the whipsaw happening in the US markets, that's why. And this is coming at a very bad time when the dollar is falling hard and the US bond market is starting to blow up, which means people's purchasing power is falling. Plus, interest rates in the real economy are starting to rebound up. One of the big promises made by Trump is the lowering of rates, and it's very straightforward why. If you bring down the cost of borrowing, this gives US firms a reprieve. For everyday Americans, refinancing their mortgages and loan applications is more affordable. So rates have to come down, and by all measures, if you push an economy into a recession, demand for US bonds should soar. But what are we seeing here? Bond yields are spiking up to alarmingly high levels, and if there's one big destabilizer of the US economy, it's interest rates. The 30-year yield almost went past 5%, and the 10-year also went above 4.5 at one point. This is a big repudiation of US Treasury bonds as a safe haven asset, and this shouldn't be the case, but yet it is still happening, which tells us generally two things might be happening on the ground. Firstly, investors were getting hit with margin calls. They were too invested in the stock market, and after what happened with the US China tariff war, everyone is in liquidation mode. When Trump confirmed a 104% tariff on Chinese exports, this smashed the markets down. The S&P fell by another 4% to below 5,000 points. So we witnessed big margin calls, forcing investors to sell their bonds to raise cash. Now sure, Trump gave us a 90-day pause, but the damage has already been done. Now that's one possibility. However, another possible scenario is investors are simply preparing for a world of higher structural inflation. And in this case, if the tariffs stay, even if it's 10 or 20%, people simply want bigger compensation to hold US debt. So yields are being repriced up. And in either scenario, this is horrible for the markets and for Main Street. The case for stagflation is rising. Even with the 90-day reprieve, the US could still face lower growth and higher structural inflation. Now there's no certainty anymore, and bond yields are starting to fluctuate widely. This is horrible for a market that is highly dependent on stable bond yields. US debt is becoming a really volatile asset. The movements and volatility are on par with what happened during the 2020 pandemic, and in this case, it makes people really scared to buy US bonds. And that's just for the average Joe. For speculators on Wall Street, it threatens to blow up what is called the basis trade. Welcome to an economy that's highly financialized, where you can bet on almost everything. Thanks to the volatility in treasury yields, hedge funds might be forced to unwind their positions and dump bonds. Now it's quite simple, and I'll explain it really simply for you. In a basis trade, you go long and you buy the cash bond at $99. You then short the futures contract at $100.50. So you lock in the price difference, which is $1.50. And when the futures contract expires, you will deliver the bond and confirm the profit. And it's a tidy sum because you get to use leverage to magnify your profits. The problem comes when bond yields fluctuate like hell. When bond prices fall suddenly, you can lose a ton of money. You get a margin call and you're forced to liquidate at a loss before the futures expire. And this is just one of many scenarios that's causing US bonds to explode. When Trump launched his tariff war, he opened Pandora's box. The fallout has spread to the US bond market, which is really dangerous. If you want to see chaos in one single chart, here you go. In just 3 days, the 10-year yield surged by 60 basis points. At the same time, the S&P crashed by over 8%. This just amplifies the reverse wealth effect where people get poorer and as a result, they stop spending. When bond yields spike up, your loan payment starts to heat up as well. And when stocks drop, you suddenly feel broke. Even though it's just a paper loss, the damage it does to your psyche is really real. If this continues, the US consumer could buckle and then the floor would really drop. These are the consequences that are starting to manifest beneath the surface. The tariff war is starting to unearth a lot of problems that were swept under the rug. And when you decide to punish the world with tariffs, it also means countries will export less to the US. Well, if they earn fewer dollars, then there isn't much need to hold treasury bonds anymore, is there? And there's big speculation on the street that China is dumping their holdings in retaliation to Trump. Beijing's holdings are well below $750 billion today, and they could very well be selling more bonds and causing bond yields to spike up. We are already seeing China restrict investments into US companies, and very soon, we could expect them to tell investors not to buy treasury bonds. So, this bifurcation won't just be in bilateral trade with Trump's economy, but with the US financial system as well. We are witnessing an economic iron curtain being raised between China and the US, and this will be disastrous. But let's circle back to America's grand strategy with the tariffs, because Scott Bessent just revealed something that we have talked about many times on this channel. The US is hoping to make a deal with their allies first to form a trade coalition between countries like Japan, the EU, and other nations, then to counter China. It's no longer just Fortress America, but to turn the entire global economy into a global fortress, to put barbed wire around each country to ensure China has no other outlet to export to. And this is dangerous not just for the US or for China, but the entire world as well.
Japan, South Korea, India, and I will note that they are all around China. We have Vietnam coming today.
Yeah.
So everyone is coming to the table, and basically China's surrounded. That as we put up the tariff wall, China's business model is predicated on this incredibly imbalanced economy and exporting low-cost goods and subsidized goods to the rest of the world. And guess where they are going to land? On the European shores. Is how do we get China to rebalance? That is the big win here. The U.S. is trying to rebalance toward more manufacturing. China needs to rebalance towards more consumption.
Look, the underlying motivation is to get China to rebalance to consume more. But doing this through coercion and trying to isolate the Chinese economy is not going to work. Remember what happened when the G7 tried to isolate Russia? It didn't work. It only made Russia stronger instead. And this move will backfire in spades. Eventually, China will rebalance their economy. And when they become a bigger consumer, you can bet they won't buy US goods. Secondly, the world isn't that stupid. If the US does this to China, they can always do it to others. The reason why countries still trade with Russia is the same reason why trying to contain Beijing is impossible. But let me know what you think. Will China's backlash cause a bigger sell-off in the US bond market? And will Bessent's global plan to contain Beijing even work? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.